learn now about depreciation and adjustment entries we need to pass on depreciation. Before starting, I would like you to know that this is a very vast topic and a very important topic for your exams. You have to have one question, one adjustment entry or one point relating to depreciation for sure in your exams. So if you are trying to learn depreciation today, just learn depreciation, no other topic to be touched for the day, because in itself it is very vast and you need to learn it in full. This will be there in your exams. Okay, so let's start. What is depreciation? Depreciation, the fall in the value of an asset due to obsolescence, due to effects of time, the value of the asset decreases. That is our depreciation. So just summing it up, fall in value of asset due to what? Due to effects of time and many more reasons. Okay, so we need to record it correctly, the value of assets in our books of accounts, because at cost only, every year I am putting it at cost only, so the assets value also gets depleted after using it. So at the correct value I need to put it in my accounts. So I reduce the value of depreciation from the value of my fixed assets. So in P&L, when I don't have a provision, what entries do I pass for depreciation are here. Depreciation account debit, depreciation being an indirect expense, a non-cash item, debit it into P&L. So I am debiting depreciation account debit to asset. Same time, reduce the value of the asset. Assets have a debit balance. When I credit it, I reduce the value of the asset, and then the transfer entry to the P&L will be profit and loss account debit. Expenses are increasing, profit and loss account debit to depreciation. So depreciation debit and depreciation credit nullifies, the value of the asset decreases and the P&L amount, the expense amount increases. These entry I pass generally when I don't have any provision for depreciation. Now, what are the entries to be passed when I have a provision for depreciation account? Okay, the entry will be depreciation account debit to provision for depreciation. Depreciation account debit to provision for depreciation. Okay, and then ultimately it will go to the P&L. It is an expense. So what will I do? Profit and loss account debit, profit and loss account debit to depreciation. So you can see that here also the debit and credit, depreciation and depreciation get nullifies. So my expenses are increasing, and the same effect has been given in provision for depreciation. Provision has a credit balance and the provision for depreciation is increasing. One more point you need to record here is very important point for your adjustment entries. Now we all know that our financial year, our year, accountant's year, accounting student year is not January to December, it is 1st April to 31st March. Now, if the question says that you have to have depreciation at the rate say 15% for the full year, whatever is the asset's value, you will simply apply 15% and 15% will be your depreciation. But remember one thing, a rule for depreciation is that if any asset is purchased, pay attention, very important point, if any asset is purchased on 1st of October, from 1st of October to 31st March, that is the last 6 months of our financial year, from 1st October to 31st March, then what you have to do is, instead of 15% on that purchase, reduce it by half, just half it, and then the amount will be depreciated because the asset has not been put to use for the first 6 months. Even if you buy the asset on 31st March, the rule doesn't change that I will put depreciation only for one day. This is not the rule. The rule is from 1st October to 31st March, within the 6 months, if you have put in any asset to use, then you have to put the depreciation rate as half of what it is given. Let's understand it with the example, that will be better. Say on 1st April, I have machinery of 10,000. New machinery purchased on 1st October. Now 1st October coming in the second half is 7,000. And the rate of depreciation, it will say that charge depreciation on machinery at the rate say 15%. Now what will you do? First of all, find out the value of depreciation. On 10,000, this machine is there for the whole year, so on 10,000 put it as full 15%. On 10,000 15% will be 1,500. And on the 7,000, on 7,000 only for 6 months, so 7,000 into 15% is the rate, into 1 by 2, that is the effective rate will be 7.5%. Show the working carries lot of marks, so 7,000 into 15% into 1 by 2, because in the last 6 months, so that comes to 525. So what is the depreciation amount? Depreciation for the year is 2025. Very important point to be noted. The time for depreciation is very important, and you will face such problems like this when you plot your final accounts very often. If you have still not understood, see the clip once again. Okay, I will continue. See, let's take up a question. Say in trial balance, what you have is machinery on your debit side. Machinery has to be on your debit side, and the amount is 3 lakhs. And below the trial balance, in the additional information, what is given? It is given that charge depreciation at the rate 20% on machinery. Charge depreciation at the rate 20% on machinery. This is given in your trial balance, below the trial balance. So what effect will I have? Two things will be affected. One is the profit and loss account, and the other is the balance sheet. See, these are my shortcut names because I don't have enough space, but always write profit and loss account as profit and loss account, balance sheet as balance sheet. So depreciation to depreciation on machinery, in the P&L it is an expense. To depreciation on machinery, 3 lakhs cut 3 lakhs, 20% of 3 lakhs is 60,000. So debited to the P&L account. And in balance sheet, see, I have to give two effects where one information is in the trial balance and the other information is given below the trial balance in additional information. Remember that there will be two effects, either one will be in trading or P&L account and one has to be in balance sheet. Keep it as a rule. This is very important. So to depreciation on machinery, 60,000 debited to P&L account. And then in balance sheet, what will I do? See, in my assets side, I have machinery. How much is the machinery? 3 lakhs. Less the amount of depreciation, that is 60,000. And the effective value left out with me has to be taken in the outer column, that is 2,40,000. This is the way you will present it when the value of machinery is given to you in the trial balance and within additional information the rate of depreciation is given. Okay, let's proceed further. Okay. Now what if the trial balance is like this? It'll take 2 minutes. I'll write it down. See, machinery stands with 2 lakhs. It has to be debited. Then provision for depreciation on machinery. I have a provision in my trial balance. Remember, in my trial balance, provision for depreciation on machinery. How much? Provision has a credit balance. So this is my debit side, this is my credit side, and it is 80,000. Then I have depreciation also given in the trial balance itself. Depreciation on machinery given in the trial balance only, 20,000, means one side has already been affected because it is given in the trial balance and not in the additional information. Now I have also having a furniture. Furniture account is also having a debit balance, 36,000. Assert, so has to have a debit balance. And then depreciation on furniture also given here only, means entry has been passed. So depreciation on furniture, I can see it in my trial balance and not in the additional information, is 4,000. Now how will you present it in your profit and loss account and in your balance sheet? See, if these points are understood, then they become very easy, and if these points are not understood, they are really confusing. So pay attention, full attention here. Profit and loss account. I have a profit and loss account here, and I am making a balance sheet here. Balance sheet as on so and so date. Liabilities here and assets here. Now first thing, machinery 2 lakh, it's my asset, put it here. Okay, provision for depreciation on machinery 80,000. Now the effect has to be given in balance sheet. Reduce this provision, because whatever depreciation, if I have a provision for depreciation, it will go into the provision account and not directly subtracted from the asset account, because it is in the trial balance. So subtract the provision for depreciation here. Subtract 80,000 from here. Okay, now you have depreciation on machinery written in your trial balance. Very important, I'm repeating it again and again. Depreciation on machinery means one effect is already given. Now again, you need not go into your balance sheet and subtract from machinery less depreciation on machinery. Wrong. It is not a point given in your additional information. It is a point already been noted in the trial balance, means that effect of reducing has already been done. So now you just need to record in your profit and loss statement to depreciation on machinery. How much? 20,000. Let's put all the depreciation together. You can have a head depreciation and your subhead as depreciation on machinery. Okay. Furniture. Furniture is again what? Furniture is again my asset, and it stands with some 36,000. Okay, in the inner column. 36,000. Depreciation on furniture. Depreciation on furniture 4,000. So depreciation to depreciation on furniture over here 4,000. I will, if there had been a provision, I would have definitely subtracted it from the value of the furniture, but directly they have given depreciation on furniture. This effect has already been given in the assets. Now I need not subtract it again, so I will take this out simply. 20,000 minus 80,000 is 3,60,000. I mean 2 lakh minus your 80,000 is 1,20,000 to be brought out, and 36,000 as it is, because I don't have a provision here. Neither will I write less depreciation here. And total of this 20 plus 4, 24,000. I will take it out in the outer column saying to depreciation. You can write it here, to depreciation, and take this 24,000 out. Say this is the outer column, so keep it here, 24,000, and just remove this. Depreciation on machinery 20,000, depreciation on furniture 4,000, and to depreciation 24,000. So now you understood the concept that when I have information below the trial balance, then give it dual effect. When the depreciation is within the trial balance, just debit it to the P&L account. Don't go and subtract it again from the balance sheet. Just subtract the provision for depreciation from the balance sheet. Keep on doing few more questions and it will be easy for you. Say one more example. I have a trial balance as on so and so. Here you have machinery, my debits and my credits. Machinery 1 lakh. Provision for depreciation on machinery is 40,000. Then depreciation on machinery in trial balance. Open your eyes, it's written in trial balance. Depreciation on machinery 10,000. Okay, furniture. Furniture account is debit balance 36,000. And depreciation on furniture 6,000. Now just tell me, what will you do with the amounts? Machinery account will go to balance sheet in the inner column. Okay, what will I do with the provision for depreciation on machinery? I will subtract this amount from the amount of the machinery. Depreciation on machinery 10,000. What I will do is I will just take it and I will debit it to the P&L account. Furniture is my asset. It will go to the balance sheet account. Had I had an amount and saying provision for depreciation, then I would have affected it in the balance sheet, but it is not there, so just take this amount to the balance sheet. Depreciation on furniture debited to the profit and loss account. This is the treatment that needs to be given. Summing up, what is depreciation? Depreciation is a non-cash item, and we record depreciation in our books either on the straight line method or on written down value method, which we also call as WDV, written down value. For further explanation on straight line method and WDV method, you have a full chapter on depreciation explaining this. On this slide, we have learned the treatments of depreciation, provision for depreciation, and how we will put them or show them in your profit and loss account and balance sheet. As we further do questions on it, the things will get clearer.